Professor Karn back with you today talking about inventory costing systems. And what we need to do in this particular case is we have to really figure out a way to track the cost of inventory. So we really have three different methods that we can look at. And we're going to look at each of these and complete an inventory record. The three different methods are FIFO, which stands for first in, first out. LIFO, which stands for last in, first out. And then we have an average cost or weighted average way of looking at things as well. So what we have to think about here is, and really remember is that it's not what's happening in reality. And the way that I can explain this to you is, and really ask you a question is, could we ensure that every customer took the oldest product in a grocery store? Well, the answer is no, but we would hope that what we would do would be rotating the shelves and that people would be taking the first one on the shelf. But a lot of people, let's think of milk, for example. We take the milk that has the longest expiration date on it so that it stays good for us a longer period of time. So there's no possible way that we could really ensure that this was occurring. So this is not what is really happening in reality, just a way to keep track and place a dollar value on our merchandise inventory. Now, they're going to ask us to calculate a couple things. Ending inventory, the value of that, what the value of our cost of goods sold is, and then our gross profit as well, if they give us the information. Now, the one thing that we have to caution ourselves is we don't want to violate the golden rule, and that is we never want to use sales prices on the inventory record. So always just kind of think to yourself, the only thing we want to have on the inventory record is our cost basis. Okay, so no sales prices on the inventory record itself. Okay, so that's really the only slide we have for that information. Let's go ahead and get rid of this here. Okay, here is our inventory record, and basically it's set up in having a date area, date column, where we have our purchases, and then we have how many quantity we bought, at what cost, for the total cost. So we'd simply multiply these two columns together to get that information. Same thing for our cost of goods sold, quantity times cost is our total cost, and how much inventory we have on hand. Quantity times cost is total cost. Okay, so I put a little bit of a data down here, and we're going to do, notice I have set up for each of these three things here. We have FIFO, then we have a tab for LIFO, then we have a tab for average cost. And then on a separate sheet, this gross profit calculation page is not an inventory record, it is separate. So remember, we will not use sales prices until we get to this particular tab here at the end. Okay, so let's take a look at FIFO and see how we do this. The first thing we'll do is look at our data here. It says here, and we're going to do the same data for each of these records, each of these methods. Assume that RK Tire Store completed the following perpetual inventory transactions for a line of tires. And it gives us all of the transactions in May. We have beginning inventory, we make a purchase on the 11th of May, we make a sale on the 23rd, we make another purchase on the 26th, and then we finalize a sale on the 29th as our last transaction. Now, remember, the sales, we still have to record them, but we will not use the $89 figure because that is our sales price, not our cost basis. So we will not use on any of these inventory records here the $89 because that's our sales price. We will use the $89 to calculate our gross profit when we get to that as a separate transaction. Okay, so every problem will start the same. We'll always have the beginning inventory. And we saw that we had 24 at $61. And now to get the total cost, all we do is we take 24 times, divided by 24 times 61. So we know our cost basis for what we had in beginning inventory was $1,464. Now, remember as we do this, this is FIFO. So even though it's not what's happening in reality. We have to always think of, we have to sell our oldest inventory first, so we're going to work from the top layer down. Okay, now, the key thing to these problems is that you, in a perpetual setting, you must balance at the end of each day. And you always need to bring down what you had in the past. So we know as of the beginning inventory, we've got this. I'm going to make that a separate day. So we're going to put that, let's put that in late. Okay, now, then we go to the 11th. So 511, it's telling us that we're purchasing 6 at 76. So I'm going to put 6 quantity at $76 for a total of 6 times 76. So we know that comes out to be $456. Now here's where students sometimes struggle, and they don't properly bring this down so that it gets it has the layers in the proper order. We must always keep our layers in order of oldest to newest. It doesn't matter what method we're using, we have to always do that, and then when we make a sale, we will be able to take from the appropriate area. So I need to bring this 24 down here before I bring the 6 in. So we have 24 at 61, total of 1464. We also now have our newest layer, 6 at 76 for 456. Okay, so now let's put this, shade this as a layer to itself here. I'll just make this a very light gray. There we go. You need to see it a little bit more than that, I think. Let's make it a little darker. There we go. Okay, now we get to the 23rd, which is a sale. Okay, so we have a sale. So we keep seeing our data. So the 23rd sale, $16.89. Remember, the 89 is not relevant in the inventory record itself. That is our sales price, so we will not use that. Okay, so we know we have 523. We are making a sale of 16 tires. The 89 is irrelevant to this. So we have to think about this. This is FIFO, first in, first out. So when you think about this, we have to take from the oldest layer first. So the oldest layer would be our beginning inventory. So we have to take, well, we have 24 there, so we could take all 16 of those. So 16 at our cost basis of 61. Again, one of those common mistakes I see is people would use the 89. You do not want to use the sales price here. 16 times 61, we have 4976 is our cost basis of those goods that we sold. Now we need to balance again. So how do we balance? We balance by taking 24, because we took out of this layer, minus what we took out. So now we're down to 8 units of that layer at $61. So plus 8 times 61 for 488. And then I still have all of this layer that I need to bring down, 6 at 76 for 456. Okay, so that takes care of the 23rd. Let's make that a separate color. Let's put that in orange here. Okay. Then we get to the 26th, we make another purchase. So now we're going to not have just 2 layers, we're going to have 3. So let's see how this works. We have 26th, we make a purchase of 14 at 86. So 14 times 86 comes out to be 1,204. So now we have 3 layers, 8 at 61 for 488. We have 6 at 76 for 456. And we have the newest layer, 14 at 86 for 1204. So we have 3 layers, and they are still in order of oldest to newest. Let's put it in. Okay, so now we're down to the last day of the month, which is the 29th. We make a sale of 17 tires. Again, hopefully you know that the $89 is not relevant here. So again, we're going to sell our oldest inventory first. We need to work from the top down. So we need to sell 17. So we don't have 17, so we've got to start off with what we do have. So the whole layer, 8 at 61, will be gone, 488. Then we have 6. We still don't get to the 17 we are selling, so we know we got to do 6 at 76 or 456. And notice that we are still 3 shy. We only have 14 here, so we got to take 3 from this layer. 3 at 86. 3 times 86 comes out to be 258. Okay, so when we balance this, we know that this layer is gone. It's there. We know that this layer is gone. It's there. And we know we've taken 3 from this layer, so we're left with 11 units at $86 our cost. So 11 times 86, we are left with 946. Okay, so that's the final layer there. Let's go ahead and do that in light blue there. Okay, so we can make some totals here now. We'll total this up. We see that we purchased 20 units. That makes sense. We bought 6 here and 14 there, so that's 20. At a total cost of $16.60. We sold a total of 33 units, and our cost basis under FIFO, $21.78, that represents our cost of goods sold total right there. And then we just bring this down. Our ending inventory consists of 11 units at $86 a unit, or $946. So we know this is our answer, and we can put totals here. That'll be fine. Put that there, and we'll just highlight this. That would be the answer to this inventory record here. Let's just make this a little bit. There we go. Okay, so we can see that, again, there were no sales prices used anywhere in this inventory record. The only thing that we did was track our cost basis to get this answer. Again, this was FIFO. We sold our oldest inventory first, and we worked from the top layer down each time. Again, make sure you balance after each day so you don't get yourself confused. Okay, I'll leave this here for a minute and come back to you shortly, and we'll go over the LIFO example of inventory record with the same data. Okay, I'm back with you now, and we'll go through the LIFO example of this. I've already entered the beginning inventory. That will always be the same if you're thinking of the data for each of these problems. Okay, so let's see what we have here. We're going to look at the 11th. We're making a purchase again. Again, we're buying 6 at 76 for a total of 456. And again, we will bring down the 24 at 61 for 1464. Okay, then we can rebalance with the 6 at the 76 for 456. And we have completed the first transaction on the 11th. Notice that this is identical. Let's highlight this again and put this in a little bit of green here. Oops. Do this in green. And do this one. And we'll be consistent with our colors here, trying to keep the dates the same colors here as we go through. All right, notice that there was no difference here at the start of in the first two things, the beginning inventory as well as the 511, because we didn't make a sale. So nothing's going to be different there at this point. Now, it will start to change when we get to the 23rd. Because now we're making a sale of 16 tires. Again, the 89 is irrelevant. But this time we're going to have to take from our newest inventory level first, and we're going to work from the bottom up. So we take from the 6th layer first. Well, we sold 16, so we know we don't have enough, but we'll still take all the 6 at 76. So we know that's 456. And now we know we're 10 shy, so we've got to take 10 units from our 24 layer, which was our beginning inventory. So we have 10 at 61. 10 times 61 is $610. And now we need to balance. So we know that we took 10 from here. So now we're down to 14 at 61. 14 times 61 comes out to be 854. Now, we have none of this layer left, so that's all gone. Now, the one thing that you could do here is at the end of each day, you could always, if you're doing this if you're doing multiple records, you're doing it for each of the methods, you could check to see if you should always have the same number of units on hand. It just might be costed out differently. So let's just check. What did we have on the 23rd? Let's go ahead and put this in our orange color here real quick. We had 14 units. Let's see if we had 14 units for FIFO. Oh, yes, here we did. We had 8 plus 6 was 14. We just had 2 layers. And in LIFO's situation, we just have 1 layer, which is 14 units. So we should always have the same number of units at the end of each day. Okay, then we get to the purchase on the 26th. We buy 14 at 86. Again, that's 1204. Now we have 2 layers. We'll have 14 at 61 for 854. And we'll have our newest layer of 14 at 86 for 1204. Alright, let's highlight that one here. Let's put that one in yellow. Okay, then we get to our last day here, the 29th. We make a sale. Again, the 89 is irrelevant. Can't stress enough to you how many people try to use this sales price number. You don't want to do that. How many did we sell? We sold 17. So now, again, we have to notice we have 2 layers of 14 units each. Which one do we take it from? Well, this is LIFO. Last in, first out. We'll take it from this, the newest layer. First, we get 14 at 86 for 1204. And then we still are 3 short, so we need to take 3 from the 61 layer, and you take 3 times 61, and you get 183. So now how many are we left with? We've taken 3 from this layer, so we're left with 11 of those units, 11 at 61. So 11 times 61 comes out to be 671, and this layer is all gone because it's right there. Alright, so I'll go ahead and bring this down. Put that in blue here. Okay, and now we can do our totals. Again, this should be the same. The number of units we buy is going to be the same across the board, and the total cost should be the same. So again, this compares 20 at 1660, does match up with 20 at 1660 there. Then the number of units that we sold should always be the same. We have 33 there, 33 here. Now this is where it will change our cost basis. In this case, our cost of goods sold for LIFO is $24.53, and we're left with 11 units at, oops, not this one, 11 units at 61 for 671. Okay, so let's put totals over here, and we'll put this in a nice little color there. Okay. The one thing that I'll kind of mention here is typically LIFO, you are in a situation in most cases where prices are going to increase over time in a lot of circumstances. Sometimes the prices are volatile and they go up and down. But notice that we started out with 61 per unit, then we paid 76 per unit, then we paid 86. So if we are costing this out and using the newest items first, we are actually having our cost of goods sold increase and be higher than it would be for FIFO because of the fact that we're selling and we're costing out our items that we're selling at a higher level than the most recent price that we paid. Okay, then we can pause here a moment and then we'll start the average cost example here. Okay, let's take a look at the average cost. This is a little different in the fact that there won't be multiple layers at any time. You will only have one layer at all times. So you won't have the different, you have to keep track. You only have just one layer each time. Okay, so let's take a brief look at this here and see how this is going to work out. We have our beginning inventory, 24, 61, 14, 64. Then we're going to make a purchase. So let's see how this works. We have 6, 5, 11, 6 at 76 for a total of 456. Now, here's where you have to understand how to do average cost. The only thing that will change the average cost per unit is a purchase of inventory. Okay? So, because we have a purchase here, okay, we bought 6 at 76, we have to combine that with this beginning inventory layer here into one layer. So how do we do that? We just add the number of units. So I take 24 plus the 6 that we bought, so now we have 30 units. Then we take the total costs and add them up, 1464 plus the 456, and we get 1920. Okay, so how do we get the new average cost per unit? All we simply have to do is take the 1920 and divide it by the number of units, in this case 30. So I'll take 1920 divided by 30 units, and we get $64. Now, sometimes you can make sure this is correct, because what you want to do is you want to make sure that, obviously, if you have a $61 cost here and a $76 cost here, your average cost has to fall between these two numbers. So obviously 61, 76, 64 does fall in between that particular range. Okay, then we go to, so that's one layer, so we'll make that gray here to keep consistent with our colors that we're using for each layer. Then we go to the 23rd. Again, there's no real difficulty here, because remember, the only time that we use actually change our average cost per unit is if we make a purchase. Here we're making a sale. So all we're doing is 16. Again, don't use the 89, we're going to use the 64. So 16 times 64 is 1024. So how do we get our new inventory? Very simple. 30 minus 16 is 14. That's 64. So 14 times 64 is 896. So that completes that layer. Again, no change in the average cost per unit because it was not a purchase. All right, let's go with orange here. Then we get to the 26th. Here we are making a purchase, 14 at 86. So we know 14 times 86 is our 1204. All right, so I got to do 14 plus 14, or 28 units total. I got to do 896 plus 1204, and I get $2,100. And then to get my new average cost per unit, $2,100 divided by 28 units, and I get 75. Let's make that dollar sign there. Okay, so now we have 75. Let's do our test. 64 was the low range, 86 was the high, $75 falls between those two numbers there. Okay, so let's see what we got here. Let's put this in yellow. And then go to our last day, which is a sale on the 29th. And notice here, we're going to make a sale of 17 at 75, 17, 75, 1275. How much do we have left? 28 minus 17 is 11, 75, for a total of 825. Okay, let's do our totals. Let's put this in our row here. Again, we have 20. We have 1660 here. We still sold 32 units. In this case, cost of goods sold was $22.99, and we're left with 11 units at 75 for 825. Okay, let's take a look at this real quick and compare all these. This here. Okay, so we know ending inventory always has 11 units in this problem, and notice that does carry through all three methods. Notice we have 33 units sold, 33 units sold, 33 units sold, and we always had 20 at 1660. So all those three things there, these three numbers will be the same, and that number should always be the same. It will be your COGS and your ending inventory that will be different for each of the records there. Okay, let's pause here for a moment, and then we'll come back and we'll do the gross profit calculations. Again, this concludes the three inventory records, and in the gross profit section, we will look at how to calculate our gross profit. Okay, so let's see how to do the gross profit calculation for this problem. The first thing we have to do is we have to calculate our total sales revenue, and that won't be different for any of the methods. It will be constant. So the only two dates that we had sales were the 23rd, so let's do 5/23 and 5/29. Okay, we sold on the 23rd 16 units at $89. Now we do use a sales price. Again, this is not an inventory record. Okay, this is just helping us calculate our gross profit. So 16 times 89, we get 1424. And then we had another sale on the 29th, which was 17 units at the same price, $89 a unit. So we had 17 times 89. So that's 1513. So our totals, we sold 33 units, and our total sales revenue is 2937. So we can go ahead and put the 2937 in across the board here. There's no difference again in that amount. That will not change. Okay, where it will change will be these numbers here are cost of goods sold. Remember, to get our gross profit, you think back to the income statement. That's the multi-step income statement. For a merchandising business, we take our sales revenue minus our cost of goods sold to get our gross profit. So now we need to take the numbers that we found on our inventory records and put them in here. Okay, so let's start with FIFO first. We had 2178 for FIFO. Let's put that in there. 2178. We had 2453 in LIFO. And then we had $22.99 for average cost. Okay, so again, how do we figure this out? We just subtract, so 29.37, this cell, C12, minus the 21.78 and 13, 759. Then we go to LIFO, we take 29.37 minus 24.53, 484. And then finally we get average cost, 29.37 minus 22.99 is 638. Now the thing that you want to check here is, obviously this is one extreme. We sell from the oldest first. This is when we sell the newest first. So doesn't it make sense that this is one extreme and this is the other? Well, average cost needs to be in between both FIFO and LIFO because it's an average. So this number, our COGS, is definitely between 2178 and 2453, so that makes sense. And then 638 is between 484 and 759. So if you ever had a situation where these numbers were not falling in between these two numbers, then that would be a problem. There would be a mistake there someplace. Okay, so that concludes this video on how to do perpetual inventory records and to calculate gross profit as a result of that. Let's take a look at the next chapter of information. We'll be looking at internal control and looking at petty cash and bank reconciliation.